Hi, I'm Steve Johnson, Chief Investment Officer at Forager Funds Management, and I'm joined by my fellow Forager crypto skeptic, Chloe Stokes. Hi Chloe, how are you?
Hi Steve, I'm well, thank you.
Now listen, I don't want any schadenfreude from you today. It's been a wild few months really in the crypto landscape, culminating in the collapse of one of the largest crypto exchanges in the world, FTX. Can you give us a quick explanation of what's been going on?
Well, you said exchange, but if I were to put it into equity market terms, FTX is actually a custodian, a broker, and a hedge fund all tied in together. It's as though you had the New York Stock Exchange, a Goldman Sachs hedge fund, and JP Morgan custody all wrapped up into one. And then in terms of what's happened, to put it in really short form, essentially customers had their crypto assets with FTX as a custodian. And when they went to pull them out, they found out that FTX had lent the assets to Alameda, the hedge fund, and Alameda had lost it all. So now you have about $10 billion worth of assets and the business has kind of fallen apart.
Oops. I think we should say worth in the crypto space. Look, we should not laugh. There are people that have lost a lot of real money here. We've sort of watched it bemusedly, maybe from a distance is a good way of putting it, but there are some interesting parallels here with equity markets and with the way markets work, and I think some really important lessons for people to incorporate into their general financial skill set. What did you take out of this in terms of things that are interesting that can actually be implied by people that are thinking about equity market investments?
Definitely, there's certainly plenty of lessons. The first one is that there were lots of really impressive venture capital investors and politicians that were talking a lot and really piping up FTX as a business. And when you watch the videos or read the articles about the 20-somethings that were running this business, that's kind of hard to comprehend. And I guess we're sitting here looking at them with the benefit of hindsight, so that's important to note as well. But it just shows that even some of the best investors in the world can get caught up and succumb to FOMO.
Yeah, it's a particularly American thing. I think a lot of the great businesses over there have been built by non-conforming, eccentric people, and they really seem to warm to them, and that's where you see a lot of the frauds as well. You've seen Elizabeth Holmes, Adam Newman at WeWork, these quirky, weird people that people just tend to throw money at them, and once one big investor comes on board, they all tend to follow.
Exactly, and I also think that a lot of the frictions and frustrations that crypto is out here trying to solve with the traditional financial system are actually there for a reason. Things like asset segregation, capital requirements, and regulation of key market players. We have them because what's happened to FTX happened 100 years ago with the traditional financial system. And the reason why we can now have so much trust in that system is because of the regulations that followed.
Yeah, I still think in our world, the system is trustworthy for all of those things that you talked about, but it's really important that people don't blindly trust that the system it works, and even things that you think are really small risks, they're worth checking on because the cost of that is almost nothing. You know, is the fund that you invest in actually registered with ASIC? Who is the custodian that holds those assets? They're things that are not hard to dig into the details and work out, and they're just worth doing those last checks and balances before you sign up to an investment.
Definitely. But finally, in terms of the crypto space, I'm feeling even more convinced that these assets are not investments, but just instruments of speculation. You can buy shares in businesses that are making profits and paying those profits out to you in dividends each year. A good example of that, and one that I talk about all the time, is Hallenstein Glasson Holdings. It's a great business. It's really well run and profitable, and it pays a 7.5% dividend yield per year. So I'm going to stick to businesses like that, and you can keep your Dogecoin.
We're pretty safe on that front. Look, I've seen a lot of people in crypto world saying, well, this is a centralized exchange and it's sort of against the whole point of crypto, and it's not a criticism of the crypto space. But this really has been one giant casino for the past couple of years. And I think in terms of accessibility to that casino, the exchanges have actually been fundamental to it. You know, really easy user interface, an easy way to transfer your money, an easy way to store your crypto, because all of those things are quite difficult to do if you don't know what you're doing. And we never would have had this bubble without it being accessible to the mainstream public and getting all of these people to get on the wave. So they may be true that the technology itself is not hurt by what's happening here, but I think this whole crypto bubble, in terms of the multi-trillion-dollar valuations of some digital coins out there, it really has, I think, shone a light on that whole space and what it's all about. And I still maintain that it's more about gambling than anything else. I think, interestingly, that means it probably doesn't go away. I've talked about this. A lot of people call it a Ponzi scheme. And in some ways, FTX, the exchange, was a Ponzi scheme because people thought that their assets were there and they actually weren't. But the crypto coins themselves, you said they don't have any intrinsic value, and it's true. And everyone knows that that's buying them. They're not sitting there thinking, oh, this has some inherent value that's not actually there. So I think people will lose money and they'll go back to the casino the next weekend, and these tokens might go up and down and all over the place, and it's not going to be an investment class, but that doesn't stop it from being a gambling asset in a very unregulated way that goes on for a long period of time. Plenty more interesting stories to come out of this area over the next couple of years, I'm sure. Thank you for tuning in, and send us any questions if there's a topic you'd like us to cover in the future. Thank you.